Hello fellow investors, welcome back to my channel. In the last video, I said there would be a major correction happening before the elections, and it's showing some signs of it as the sell-off continues yesterday. S&P was down more than 5% and the Dow was down more than 6% at the end of the trading session. I want to make this video to inform first-time investors that the market right now is overvalued and is having systematic problems. I know it's been a great couple of months since whatever traders bought is making them tons of money, sometimes giving out returns of 2x or more. What people are doing right now is gambling at a casino with fresh money coming out of the Fed. What you need to understand is that you shouldn't get caught up chasing FOMO, fear of missing out. People are playing with hot potatoes with stocks, especially the ones going bankrupt. They buy the stock hoping the next person would pay a higher price than they did, until there's no more buyers left. The market will eventually get back at them for making those bad investments. Now, if you missed out on getting to position during the March lows, you should be really careful of your stock positions. I don't care what others are telling you otherwise. They might say that the stock market comes down a little bit, but eventually it'll go back up. It's true the market in general only have minor bumps here and there, but eventually it goes back higher. But this isn't true for individual stocks. Hertz, for example, was a $20 stock before the pandemic. Now it's trading at $2 and possibly going to zero. The market is having systemic issues when Fed injects billions of dollars into the market directly and indirectly. Good systems don't need support from the Fed. The current market situation right now is dependent on Fed's every word. If Fed continues to turn on the printer and create more liquidity, we're going to have more erratic moves like this with 5 to 6% drops on a single day. Healthy markets don't move like this. This raging market bull is not reflecting on the recession going on in the world right now. Good systems are made up with sectors that are strong to withhold recessions across the globe we're experiencing. Fed should let nature take its course and allow failing companies to go through bankruptcies to encourage competition and innovation. When one company fails, another will emerge from its mistakes and become a more competitive company. Bailing out companies trying to help is actually delaying its death and causing more harm to the ecosystem. As a result, pay greater consequences at the end. Sectors such as retail, energy, and travel are struggling with high debt and can't repay that debt since revenue is down dramatically. Banks will soon to follow the trend if these debts are not being repaid. We need a market that is independent and resilient, which in turn will create better outcomes for investors in the long run. At the current high valuation, I see a few catalysts that can cause a major downturn. To name a few, the looming China trade war, the second wave of the coronavirus, and the Biden presidency. But the second wave of the coronavirus is the biggest risk to this market right now. The market will bring us back to test the lows in March and possibly going lower because we're still recovering from the first wave. Main Street is suffering with 40+ million unemployed. Fed's projection is negative 6.5% for GDP in 2020. If you do the math, that would take mid-2022 to recover the losses. Passive investing in the wrong stocks will cause you to be bag holders for years, or see your investments go to zero. Any trader that is new to the market should get educated and paper trade before making foolish bets. Don't let anyone tell you that the stock market is going higher, so you invest in companies that is going to go bankrupt in the next few years. Thanks for hearing what I have to say. Don't forget to leave me a comment of what you think. Do you agree or disagree? I would love to hear what you think. Thanks for watching again. See you in the next video.